warm welcome. You're watching Business Today Television. I'm Sakshi Patra and this is Market Today, a show where we'll help you understand the closing action on the day street. Now, what started off on a muted note has actually seen a sharp and a strong moving rally as far as the markets are concerned for the second day in a row. We have seen that the markets are now inching to the day's high level, 19,850. Back on the screens as far as the Nifty is concerned, a solid 174 points, 175 points high in trade, about a 0.9% of a surge coming in on the Nifty. The Sensex also topped the 66,000 mark, up 500 odd points. The Nifty Bank is up by 0.4% at 44,361. Looks like the Diwali is over, but soon enough we are seeing the Merry Christmas rally also catch up. And you're looking at all cylinders firing as far as sectors are concerned on the markets, be it IT stocks, pharma, healthcare, durables, consumer durables, autos, oil and gas, everything is seeing a very, very strong move. All the sectors on the Nifty, by the way, are now in the positive zone. We're also looking at the IT stocks leading the pack in trade today, like, they're coming back in a strong way. You're looking at TCS, Tech Mahindra, HCL Technologies, Infosys really rallied to the day's high level as well. Hero MotoCorp as the top gainer as far as the Nifty is also concerned. So these are some of the heavyweight counters that are moving the index higher. On the losing side, you do have about 6-7 stocks that are down in trade, led by Power Grid, Coal India. So the energy basket seeing some profits being taken off the table. You have Axis Bank that's not participating, Adani Enterprises, Cipla and ITC, and also Eicher Motors slightly lower in trade. But clearly the flavor of the season seems to be the IT pack, because even in the F&O action, you do see Coforge climbing 6.5% higher in trade, followed by stocks like Emphasis that's moving up in trade as well as far as the F&O action is concerned. Let's now welcome our two guests on the show to help us really navigate through what's really pushing the markets higher and where are they headed from here on as well. Kranti Patini joins in, Director Research at Wealthmill Securities. Also joining in is Ruchi Jain from 5 Paisa. Welcome to both of you. Thank you so much for taking the time out for this discussion as well. Mr. Patini, let me kickstart with you first. The key reasons why the markets are rallying. Of course, the rally started off yesterday or day before last night when we saw the US markets reacting to the lower inflation print and the hopes of federal rate hikes perhaps coming to a fag end as well. But even today, despite the slight lower move as far as Asian markets are concerned, Indian markets are actually soaring much higher. What do you think is the key reason?
Hi, good afternoon, Sakshi. Yeah, market started with a slow note, but the pace picked up very well, and market was heading to the new level, and it has crossed all the resistance levels of the market. My dear friend Ruchir Jain will tell in the technical terminology. But what we can sense, Sakshi, right now, the Indian domestic factors are quite strong. Whereas the advantage for the market today is the changing narrative between US and China. President Xi Jinping is in US, and the changing relationship and the is getting in a very positive way. That given the bulls to kickstart further, and we got the US uh, uh, Federal Reserve can take a pause or can reduce the interest rates, which is going to be very positive for equity markets. That is the reason we can see the external factors, which were the headwinds earlier, now they become the tailwinds and helping the market to go and climb all these wall of worries. Sakshi, fortnight back, the external factors were completely negative. The US bond yield was above 5%, the inflationary worries, and the Middle East tensions, and the rising tension between the other West Asia. All these narratives were creating pressure on the market. Right now, we can see the external pressures have changed in the past couple of days' time, and they are helping the Indian market to sail through from all these wall of worries. And time and again, actually, we have been discussing on your show. Indian markets always these are the very good markets to buy at every dip, and right now we have proved again the resilience and resurgence in Indian market.
Sure. Rujit, your thoughts on the Nifty and the Nifty Bank, and where do you see the expiry take place, and how would you advise investors and traders to move on the index level, particularly? All right, we'll connect back to Rujit in a while, but the market's going very, very strong. 160 points higher in trade as far as the Nifty is concerned, 19,832. Mr. Patini, let me start off with some of the sectors that are really contributing to the move in the markets today. IT sector clearly, deserves a mention here. This sector has not really participated when we talk about the previous Samvat. But the new Samvat, as it is starting, the sector seems to be seeing some fresh moves coming in. 3% higher for the Nifty IT index at 32,406. Even when we talk about the top Nifty 50 contributors today, Infosys is contributing 34 points to the Nifty gain. TCS about 28 points. HDFC Bank, we have 20.5 points. But HCL Technologies, again, about 9 odd points right there. So three of the top four contributing stocks are from the IT pack. How would you be really positioned on the IT space right now? Do you think the worst is over, behind, and now is the time to definitely look at these large cap IT names that have been rather underperformers?
Actually, its price changes the perception of the people. One rally, people try to look into IT right now. But we have been kept on telling the large cap IT stocks on a historical perspective and the relative perspective, the valuations looks attractive. One can accumulate IT, especially the large cap ITs, in a staggered manner. So one can continue the approach of accumulating large cap IT stocks in a staggered manner. Uh, we need to wait and watch how the data that's going to come from US in the past, in the next couple of quarters, that is extremely crucial at this point of time. The mid cap IT have been rallying, whereas the large cap IT has been, there is a overhang. When we interact with the management, the large cap IT, the tussle with respect to the large cap IT is concerned, the order book visibility is there, but it's taking time for the orders to get executed. If the US economy and the Federal Reserve actions in the next couple of months' time, it can give more clarity for the IT stocks are concerned. Uh, right now, the investor strategy is one need to accumulate IT stocks, especially the large cap IT stocks, at a very staggered manner. Whenever there is a dip, one can accumulate without any hesitation. Because IT has been the outperformer on a longer term perspective. Of course, these kind of underperformance and these kind of lingering effects can give a very good opportunity for the long-term investors to accumulate the stocks at a relatively better valuations.
So, what would be your top pick as far as the large cap IT space is concerned? Anything that you'd prefer more than the others?
Yeah, one can pick up stock names like Infosys, HCL Tech, and the TCS, the
Okay.
usual names. If the investors have little bit high risk appetite, one can get into stock names like Persistent Systems, Emphasis, Sonata Software. These are the names have a greater visibility. One can accumulate with a medium to long term perspective.
Sure. We have Rujit back with us. Rujit, I was wanting to understand from you your strategy on the Nifty. Where do you see the expiry? And as far as the strategy on both Nifty and Nifty Bank is concerned now, how would you advise?
Yeah, hi, very good afternoon, Sakshi. So we have already seen a decent up move from the recent lows. 18,840 was where the recent low of 26 October was placed. And we have rallied about 1,000 points from that level. And specifically, if you look at the mid caps and the small cap space, then a good amount of outperformance have been seen from mid cap and the small caps. But the momentum readings on the lower time frame charts of both mid cap as well as small cap index are now in overbought zone. So we have advised our clients, to start booking profit and long positions in mid caps and small cap, at least from a short term trading perspective. It's not that the mid to long term trend would change, but from a short term perspective, I think the large caps would now witness some decent buying interest over mid caps and small caps. So as far as index is concerned, 19,850, 900 is where the immediate resistance is, and 19,600 to 650 is where the major support for the index is placed. So we don't see a good risk reward ratio for creating fresh longs over here, but rather booking profits on trading long positions is what we are advising over here, and keep a buy and dip approach rather than chasing the market after such a rally.
Okay. Ruchit, any particular trades for the last half an hour that you'd suggest?
Well, not for last half an hour, but from a positional perspective,
Okay.
ICICI Lombard is one stock where we are expecting a good up move in the short term. So we have seen a decent consolidation over last few months, which just seemed to be a time-wise correction within an uptrend, and the stock is now on the verge of a breakout, from this inverted head and shoulders pattern, which is a technically a bullish pattern. So we could expect some good momentum over there. So short-term traders can go long over there with stop loss below 1350, expecting target somewhere around 1500.
This is ICICI Lombard you're talking about, right?
Yes, yes, ICICI Lombard Insurance.
Okay, so staying with the insurance space, Ruchit, I wanted your view on General Insurance Company as well. Today, the stock has really shot up very, very sharply. It's the top gainer on the Nifty 500 basket, almost 8% higher in trade. Your thoughts on the stock, and what would your next target be? It's trading at around 242, 243 odd levels.
The positional charts are quite positive. We have witnessed a gradual up move in the stock, and what one can see that whenever there were price declines in last 2 or 3 months, during price declines the volumes were not high. So the declines have been not by lower volumes, whereas price up moves are supported by good volumes, which is a good mid to long term structure. So I think over here positionally one can expect levels around 270 to 280. And support is placed around 220 to 225. So buy and dip strategy could be kept over here too. If we get any declines towards that 230 to 25 range where the risk reward ratio would become favorable, one should use this as a buying opportunity. Both the stocks, GIC as well as ICICI Lombard Insurance, both the chart structures are quite bullish, if one is looking from next 2 to 3 months perspective.
Okay, Ruchit, I was discussing with Mr. Batini also on the IT pack and how the stunning move has come in today, both on the large caps as well as the mid cap IT space, which has clearly outperformed in the previous somewhat as well, the large cap peers. How would you be really positioned on Nifty IT now? Some of the stocks from the large cap basket, are they looking attractive at the current levels?
So mid caps have already been rallying since last couple of quarters, but what we have seen that post the quarterly results, the large caps have not outperformed,
Yeah.
and there was more of a consolidation phase which has been going on in the large cap stocks. Now, what has happened that the broader markets have seen a decent rally, and comparatively, the large cap IT is one space where the momentum has not picked up since in this entire uptrend of last 6 to 7 months. So I think that's why some buying interest has been seen over there. And stocks such as TCS, HCL Tech, no, and Infosys, these three I think would be the large cap names where no price volume action is now improving compared to what we were seeing a quarter ago. So yes, a gradual buying could be seen in these stocks. As I said, HCL Tech would be the preferred one considering the outperformance within the entire basket of the large cap IT names. But even TCS and Infosys here from here on downside seems to be very limited. So gradual buying can be done, buy some quantity at current levels, and one can look to accumulate on any kind of declines.
Okay, I'll also in the same breath ask you, and then Mr. Patini, also on the mid-cap IT names. You did talk about how they have been performing very well over the last few quarters, but today we are seeing Coforge, for example, as the top mover on the F&O space, 6.7% higher. We're also looking at Emphasis, that's up 4%. We've been discussing Birla Soft, Persistent Systems quite a number of times over the last few weeks or so as well. Which stock out of these or any other from apart from this list do you see now is poised for another leg up, has the best potential to even now grab the stock at these current levels? Ruchit.
Yeah.
Okay, yes, as we said, the mid cap IT has already been doing quite well compared to large cap IT names. So I
Yeah.
think yes, stock specific approach could still be kept, but no, the risk reward ratio seems to be more favorable from the large cap names. But
Okay.
within the mid cap names, if I have to choose, then I think Coforge, Persistent Storage Systems would be the two names where no, the downside could be very limited, and
Okay.
any kind of dips can be used as a buying opportunity.
Okay. Mr. Batini, your top pick from the mid cap IT space would be?
Yes, actually, as KPIT, the stock with respect to the fundamentals are concerned, of course, the stock has rallied. It's been a multi-bagger, but still, it's a stock to buy at every dip
Okay.
on a longer term perspective, on a medium to longer term perspective, because of the current emphasis of the domain they operate, the automobile industry. So the stock is positioned to do well in the coming quarters also. So any dip in KPIT Technologies one can add. At the same point of time, company names like Sonata Software also one can add at dips.
Okay, KPIT Technology 6% higher in trade and does have the potential to even go forward from here in Sonata Software. Apart from this, let me also talk about the upcoming IPO from this tech space as well. Since you took the name of KPIT Technologies, Mr. Batini, Tata Tech IPO is now going to open on November 22nd. The price band has been revealed for 75 to 500 odd. It is a complete OFS. We all know that. But how would you be looking at this opportunity, and would you advise investors to really look at this IPO?
Definitely, Sakshi, given the kind of the pedigree the company enjoys and the domain they operate, definitely it's a investors can subscribe for this IPO. But one thing is, given the kind of exuberance and euphoria on Tata Technologies, how the allotment can be done, we need to wait and watch. If anyone is getting the subscription uh, required the lot, they are lucky enough.
Okay, right. Let's shift gears now from the IT pack to the auto space as well, because the Nifty Auto again has hit a record high level today. Auto stocks are coming back in flavor. Hero MotoCorp is up 3%. That's the top gainer on the Nifty as well. There's Trigger as well. Hero MotoCorp has reported the highest ever festive sales, which has also crossed the pre-COVID festive sales as well. 14 lakh units or so has been reported by Hero Moto, and you can see the momentum coming in. After a while, Mr. Batini, we are seeing Hero Moto really react this way. There was a long dull period for the entire two-wheeler pack because of the kind of crisis that they had been facing on demand, on the semiconductor issues as well. But we are seeing off late Eicher Motors really perform very, very well. Hero MotoCorp today has performed well as well. Bajaj Auto recently touched its all-time high levels again. How are you looking at this entire two-wheeler basket, and which is the best stock to really look at right now?
Yes, actually, yeah. All the two-wheeler stock numbers have been coming up very good. Given the kind of the current buying interest that's emerging with respect to the two-wheeler space is concerned, my favorite pick would be TVS Motors on a longer-term perspective because
Okay.
of the product mix they have. And I just a note, 100 rupees invested in TVS Motors. It's a very silent stock, not discussed much. Is in last 10 years, it's given 2,700. That means it's given a return of about 2,727 times return the stock has given. So, given the kind of product proposition is concerned, one can accumulate TVS Motors for a long-term perspective.
Okay, Ruchit, what about you? Any particular stock that is your favorite from the auto basket? Two-wheelers, four-wheelers?
So Bajaj Auto is one stock which technically has done quite well. A high top, high bottom structure has been formed over last few months. And also the price volume structure is quite bullish over here, irrespective of what we have seen that in between when the auto space went through some consolidation or some correction, this stock within the sector also has outperformed the peers. So I think here the trend seems quite possible on a mid to long term charts. If we take out some reciprocal retracements, then 5,800 to 5,900 is where the target projections are coming. So any kind of declines towards the support of 5,200, 5,300 range could be used as a good buying opportunity. So I think here downside seems to be very limited, and positionally around 58 to 5,900 should be the target range for Bajaj Auto.
Okay, and at the same breath, let me ask you on Tata Motors as well. Since we were discussing Tata Technologies IPO, Tata Motors is looking to gain with the kind of offloading of shares that it is going to do in the OFS, about 11% odd or so of stake that they are going to be selling for 4.6 crores. How would you look at Tata Motors now?
So primarily, even this stock has done well. No, a good amount of buying interest has been seen over here, and the retracements indicates target projections for the short term somewhere around 700 to 720. So I think any existing long positions, if there are, then they should be held on. But for fresh buying, I won't advise over here since 710, 720 is not much far from current levels, even if you to look from short term perspective. But no, any kind of declines towards 640, 650, there would is the level range where support for the stock is placed. So buy and dip strategy should be kept in this. Any dips towards 640, 650 range could be used as a buying opportunity.
Okay, understood that. Let's also focus on some of the other stocks as well that are in focus. Mr. Batini, let me take this one with you. Walk hard. That stock has suddenly shot up very, very strong. Momentum is being seen on this one, about 13, 14 odd percent up in trade today. Walk hard Pharma is something that you have been tracking as well for long. Your sense of what is leading to this fresh bout of move, and will this sustain? After a long time, we've been seeing that Walkard is also finally moving in trade. 319 currently. Your sense and the key reasons why it's moving up.
Yes, actually, the stock was in line with the other pharma stocks. The stocks was an underperformer earlier. We can see the stock moving in the uh, past week around the 30%
Yeah.
in this week only. But if you have to look at the numbers, they have a drug by name WCK5222, which is in uh, the clinical stage right now. It can give some kind of revenue channel, and the company is going to monetize that product going forward. So, and the valuations looks attractive at this point of time. That is the reason we can see some kind of buying interest that is emerging with respect to Wakard at this point of time, Sakshi.
Okay, Rujit, do you track this stock? 52-week high has been hit on an intraday level for Walkart today. The stock has gained about 80 to 83% in the last 6 months. So the strong move continues. But your own sense of where is the next target placed for Walkart?
A bit high beta counter. What we see that whenever this stock corrects, the corrections are usually very large, and similar thing can be seen on the upside move as well. But I think the stock has already seen a rally of about 25% in this week, and major support for the stock is placed around 240 levels. So risk reward ratio for going long over here is not that favorable after this kind of up move. But on the higher side, if anyone has bought at lower levels, then they can continue to ride this trend and look for no target projection somewhere around 340 to 350.
Okay, got that. Let's look at the mid cap basket. The Nifty mid cap has crossed 41,800 mark. It's at record high levels again. So fresh part of move really coming in on an intraday level. Your own sense, Ruchit, on the mid cap index, and how should one be really looking at this one?
See, as I said at the start of the show, that the mid cap and small cap have registered all-time high and has already seen a good up move. But the readings on the lower time frame charts are quite overbought. And usually, whenever we see such overbought readings, a phase of profit booking could be seen. So we have advised our clients today to start booking profits on the long positions, at least from a short-term trading longs which are there. Profit booking should be done over here. So we expect either a corrective phase. Now corrections can be in terms of price wise retracements, or there could be a time wise correction as well, where some days of consolidation could be seen in the mid cap and the small cap phase. But at least the risk reward ratio for traders is not much no favorable to look for no significant buying opportunities over here in the mid cap and the small cap space.
Okay, got that. Let's look at one more stock. Mr. Patini, I'll start off with you. CE Infosystems or MapMy India, that's extended gains for the fourth day today. It's up by almost 7 odd percent. The stock has rallied pretty sharply this entire year so far. 116% kind of a move is what we've already seen on this stock. 2278 currently. Your own sense of how would you see this company and the stock price going forward?
Yeah, there is some buying interest is emerging. These kind of names actually like MapMine India, and there are some specific pockets of the technology-driven companies. So, on a shorter term perspective, at this point of time, given the kind of movement in the stocks, uh, one can take the profit from the table at this point of time if the investor is in profit, and the medium to long term investors can stay invested in these kind of names at this point of time, actually.
Okay, Ruchit, I know that there are no very long-term charts over here, but do you at all have this stock on your radar? Are you going to be checking it for the prices?
I can just give the support levels for the stock. The
Sure.
stock has seen a good up move of late, with a high top, high bottom structure. And but we have seen that on any declines, 50 days exponential moving average has acted as a support since the month of June. So that average is now placed around 2000 rupees. So ideally, traders with existing long positions should place a stop loss below 2000 now. And considering that the historical data is much less, it's very difficult to give any target projections for this one.
Okay, fine. Fair enough. Let's talk about some more stocks then. I wanted to discuss NTPC with both of you. Stock hit a record high level today. Right now it's up by almost 2 odd percent at 251 odd levels odd or so. Mr. Patini, how would you be looking at NTPC amid the fresh buying that's again emerging on the entire power space?
Yes, actually, there is a lot of emphasis towards the power stocks are concerned in a medium to long term perspective. One can accumulate NTPC. This stock is suitable for even for the low risk appetite investors also. One can buy the stock given the kind of the power demand is going up in the coming quarters also. NTPC can do well. So one can accumulate the stock on a medium to longer term perspective, actually.
Okay. Rujit, your next target on NTPC in case you track the stock?
Yes, certainly the trend for the stock is quite positive. No, and over a medium term, since the stock is at all-time high, generally we take out reciprocal retracements of previous corrections to project that the targets at all-time highs, and that is giving a medium-term targets around 270 to 280 range. So I think the stock would continue to see a gradual up move. It's a low beta name. We should not expect any fast up moves in the stock, but gradually this high top, high bottom structure which is taking place in between consolidations or time-wise corrections could be there, but probably we expect target somewhere in the range of 272 to 280 over next few months.
Okay. Rujit, what about Manapuram Finance? You know, that stock is clearly in a strong, strong up move. Again, second day in a row, it's the top gainer on the F&O space. It's up at 7.2% right now. How would you be looking at Manapuram Finance after this strong move?
So generally, the follow-up moves are quite important when we witness gap up or gap down openings post any kind of news flows. And we have seen that after the results, we witnessed a gap up opening yesterday, and today a good follow-up move is there. That too supported by higher than average volume. So this structure is quite bullish, and I think the stock has potential to rally further towards 180, 185 range.
Okay, got that. Let me now discuss with you the realty space. This space also has been on a buzzing spree over the last few trading sessions. Again, today it's one of the top gaining sectors. We are looking at strong moves coming in on Prestige Estates, for example. That's up 4.5%. Sobha is up by almost 4%. Oberoi Realty, Macrotech Developers, DLF. Mr. Patini, anything that strikes you from the real estate basket that you would be comfortable taking a position on?
Yes, actually, all these stocks have been rallied a lot. In fact, in the last 2 quarters, they given a very good returns, and the reality index was one of the outperformer from this Diwali to last Diwali. So it's a very surprising moves. Actually, what the point to ponder upon is when the interest rates have been going up in this period. The interest rate tends to we do call as a reality stocks, but the Indian reality stocks given a completely different returns and outperformed the remaining other indices actually. So one can consider buying these stocks at dips. Still, there is the numbers looks quite strong. One can add Godrej Properties and Mahindra and Life Sciences, Poltepalti. These are the stocks one can look at this point of time, given the kind of relative valuations are concerned.
Okay, Ruchit, anything that interests you from the real estate basket? Any stock with a target and stop loss that you can share?
So Godrej Properties is one stock which we have recommended in our as our Diwali pick over here. So high top, high bottom structure, clean price volume action where price up moves have been supported by good volumes, whereas on dips the volumes are low. The only thing is that the stock price has already seen a good up move in last few days. So I would advise to buy this stock on any kind of dips. So 1800 to 1750 ideally should be a good range to accumulate the stock. So if we get any kind of declines towards 1800 to 1750, short to medium term traders can look for buying opportunity in Godrej Properties over there.
Okay. Ruchit, could you also share last 5 minutes to go before the market shut shop, any BTST or STBT trade?
So frankly, not a kind of market today is actually for BTS STBT trades. Last few minutes, we have seen some cool off from the highs. And as I said, the mid cap and small cap space is quite overbought over here. So it's very difficult day for a BTS STBT trade today. So I would tend to stay away for that one.
Okay, for tomorrow, any range that you'd like to say where the markets could be trading at, any important levels?
So 19800 would 19850 would now be seen as a crucial resistance. because that's the level where even markets made high in the month of October. So around 15th to 17th October, high was around 19,850, from where markets were corrected towards 18,850, correction of about 1,000 point. And today also the index is resisted around that level only. So that's a major hurdle for tomorrow's trading session as well. And until we surpass that 19,850, 870 mark, I think no, it's better to stay a bit light on positions.
Okay, markets are cooling off like Rujit pointed out. So 19,850 gone, 19,800 gone. Right now the Nifty is just trying to sustain above 19,750, trying very hard right there. But you can see that dip coming in the last few minutes as well. So what's pulling down the index? It's the banking space clearly that's dragging it the index down. PSU banks down by 0.2%. Private banks 0.08% down in trade. Nifty Bank overall 0.13% down in trade. Financial services also dragging. So all three constituents dragging in trade. So it's clearly the banking space that's contributing to this sharp profit taking being seen on the markets in today's trade. Apart from this, it is metals and the FMCG space that's also coming under pressure, just as we are 4 minutes away from the day's close too. Now as far as the PSU banking space is concerned, when we look at some of the stocks that are dragging the street at this point in time, let's look at the top losers on the PSU basket. It's Union Bank, Central Bank, Bank of India, all down by over 1%. On the Nifty Bank, on the private banking space especially, the top stocks that are down in trade, that are dragging the stocks and the index down: Axis Bank 1.5% down, and ICICI Bank. The clear stocks that are down in trade and dragging the private banking space down in trade too. Metals back. Let's look at the stocks that are dragging the stocks here. So Adani Enterprises, Hindustan Copper, Vedanta, Steel Authority, NMDC, Hindustan Zinc. Clearly profit taking place as far as the markets are concerned on the metals pack clearly, but IT space continues to hold up strong. You're seeing 2.7% higher kind of a move coming in, and of course Tech Mahindra, HCL Technologies, TCS, Infosys, the big four clearly at the top of the markets right now. Apart from this, it's the pharma space like Dr. Reddy is also pulling 2% higher in trade. Let's also look at Reliance Industries. We haven't checked that one today. The heavyweight counter, in fact, biggest stock listed by market cap as far as the markets are concerned, 2357. Flattish right now. So you can see that dip come in the last few minutes. Reliance Industries was contributing, so their profits being taken off as well. That's also contributing to the decline in trade over the last few minutes. But right now stabilizing 19,765 order levels or so as far as the Nifty is concerned. Mr. Pateni, let me come to you. What is it that looks of important or of value to you in this current market setup right now? Where would you really look to build positions?
Yes, actually, on a longer term perspective, the industrials and engineering capital goods, this space looks attractive at this point of time. And also, as I mentioned, the large cap IT also looks attractive at this point of time. But there is no hurry to jump and buy at this point of time. The staggered approach can be exercised to accumulate the stocks at this point of time. And defense stocks have been in a consolidation phase. So one can accumulate the shipbuilders or names like HAL, Cochin Shipyard, or Garden Reach. One can accumulate on a medium to long term perspective.
Okay, Rujit, your last thoughts. Any particular stock that has caught your eye? You'd like to take positions tomorrow?
Well, I already discussed about ICICI Lombard, so primarily that would be the only pick that I would recommend that one can go long over at current levels as well. But apart from that, focus should now shift to more on the large cap stocks rather than mid cap stocks from a short term perspective, because I think that's where the relative outperformance now would come off in case the markets are to also give any kind of corrective moves.
Got that. Okay, so let's head to the markets close now. The Nifty Bank slipping into the red, 0.14% lower in trade, and that's the one that's pulling the index lower. But the Nifty gainers include Hero MotoCorp, Tech Mahindra, HCL Technologies, TCS, Infosys, Bajaj Finserv, that's now up by 2.2%. So recovery coming in on that one. From the IT pack, Sterling Technologies also up by 8-9 odd percent. Dish TV is up 8.5% odd. Suzlon Energy, some of the stocks that are buzzing in trade towards the day's close. close 5% higher. You also have the NSE advances of 1559 versus 1421 kind of declines coming in. So the advance decline ratio is almost equal. When we see the Nifty, it's 0.5% higher, closing the day at 19,759 currently. You're also looking at the Sensex, that's now at 65,959, up by 0.4% odd. The Midcaps are 41,703.7% of an uptick. Clearly, it's the Nifty Bank that's the clear culprit today. We're looking at VST Tiller Tractors, that's up 7.5%. CESC up 5% as well. Some of those power names that are doing well towards the end of the day. NTPC 252, 2% higher in trade. Tata Power 1.4% higher in trade. Midcaps, of course, at 0.7% up right now. So that's as far as the closing bell is concerned. At day's close, 87 points higher, 19,762 as far as the Nifty is concerned. So that's as far as the market closing action is concerned. Do stay tuned on to Business Today Television to catch all the updates from the world of business and stock markets as the action continues on the other side. Many thanks to both our guests for being with us and sharing all the insights with all our viewers. Reserve Bank of India has now directed the company to stop